Wow, U.S. interest rate payments reach 1 trillion. Where do interest rates go from here? Hello, this is Chart GPT today. Yes, indeed. Wow, U.S. government debt interest payments now reach $1 trillion. Take a look from the release here on the Fed. You can see that we're almost right at $1 trillion. So that means out of the six and odd some $1 trillion, $1 trillion of that is going to go to interest payments. Of course, that's two things. Interest rates have been rising due to the Fed's policy of trying to stamping out inflation. And of course, government spending and revenues are a big issue here. Let's take a look at on the spending side. It's been a gradual poke up. Of course, all those spikes are these different government attempts to help our economy, the situation with COVID, and it's been angling up there. It's starting to go from a flat line to more of an arc line, so it's reaching exponential type increases in spending. On the government side, on the revenue side rather, obviously we had some good revenue, but now it's falling off. So rising costs and lowering revenue equals, with higher interest rate, equals higher interest rate payments. So that means it's crowding out other things that the government needs to spend money on, or we're going to have to finance that with even more credit. So that becomes a ballooning effect here. Let's take a look at what the predictions that we've come up with here. Fed funds rate is currently hovering around a 5.25, and of course people think that could go another 1 or 2 ratchets higher. Of course, inflation rates have been coming down. That PPI report coming out last Friday kind of jolted the markets, and so the Fed may not have to be quite so strong, because we've been predicting going into the U.S. election from here, considering all the factors, interest rates could be falling, and we'll go into a little bit more details of that. First of all, I want to take a look at that U.S. 30-year Treasury bond. Right now we were in that wedge looking to break up, and we did start to break up, but no. It kind of maybe a false breakout. Some people think the rates were going to go higher, but in fact we're thinking that it'll drop because of the fundamentals here. Of course, looking at the technicals, that it fits nicely on a hit somewhere around the 2.5, between 2 and 3%. So we're thinking going into 2024, these bond rates are going to come down. And of course, what's driving that in terms of the fundamental? On the upside, we think that Fed is going to pivot with easier money because they don't have to raise rates because inflation is coming down. Of course, that means stocks could hit new highs with the easier money. Might get a little bit of a real estate recovery, which will help the GDP numbers, which have been pretty flatline, near zero. Of course, that could mean a resurgence in commodities because inflation will spill into the commodities market. So that looks like the path forward on the upside. On the downside, which is a good thing here, the lower interest rates could help the GDP because we've had lagging unemployment, not falling off a cliff, but nevertheless, of course, that means the dollar gets walloped because lower interest rates mean a lower dollar. Recovering GDP and lower inflation, so that's the key there, and that's what the Fed wants going into the U.S. election. Of course, after the election, who knows? So read our AI dissertation on what higher interest rate payments for governments mean. Kind of interesting. And then go to the link in the description box for the post and see what it means in terms of what you think the direction of interest rates. Are they going higher, lower, or just kind of meander where they're at? So go ahead and take that poll. Don't forget to subscribe.